It's people always going to say this time it's different. And the thing is, there are always going to be certain things that are different within the grand scheme of things. And but the theme is the same. Okay, it's the details that are different.
Yeah, they say history doesn't repeat, but it often rhymes.
Mark Twain? Yeah. So, I mean, I do expect something to happen. I expect the stock market to top sometime between now and the end of the year. And I expect that topping in the stock market to have a drag on crypto. As a matter of fact, I use something for my market cycles and analysis called stage analysis. And right now, the entire crypto market is in a stage 4 of its entire cycle. Stage 4 means it's in a declining phase. Even though we might get relief rallies to the upside, we're still in a declining phase of the cycle at the moment. And we still have between now and the end of the year, which we could see a price capitulation with some sell-off event that takes place, risk-off event, or if we get to the end of the year and prices are still consolidating the way they are, by the time we get into Q1 2027, if prices are still just consolidating as they are now, that means this was the bottom.
Right.
That's what that means. So we still have time. But I do expect something to happen in the stock market because I think it's overextended, and regression to the mean is one of the most powerful laws in financial physics.
I would agree with you. You think, so we've got a couple more IPOs that are going to happen here. We've got,
the best exit liquidity strategy in the game. Like, I know it.
If you just had SpaceX, which is rocking and rolling.
It is rocking and rolling.
And now we're going to have OpenAI and Anthropic here in the not too distant future too. So I think, as of today, we're recording this on the 16th of June. SpaceX has become like the 4th largest company in the world, surpassing both Amazon and Microsoft today.
Yeah, I saw that.
Which is wild to see.
Yeah.
Do you think these other ones are going to time the market well? Do you think, you said between now and the end of the year. So, it could be a wide variety of outcomes here.
Yeah, for sure. Yeah.
David Hunter has continued to up his projections, great macroeconomist.
Yes, yeah.
And he thinks we're headed for 10,000 for the top of the S&P. And when I looked at the fear and greed index in the stock market, we were at like 38. So we're technically still in fear.
Yeah. So we have a lot of room to go.
Right. It still feels kind of euphoric to me, but apparently the sentiment in the market is different. So maybe he's correct. Maybe we see some substantial upside between now and the end of the year. Do midterms play? You mentioned that in your thesis earlier on around like that tends to be the worst performing year out of the 4-year cycle for the presidency.
It does. And that's not only for the stock market, but for crypto as well. Ever since crypto came into the equation in 2009, it affects crypto as well. It's been the worst year for the crypto markets within the 4-year cycle. And the best year actually has been the presidential year.
Election year.
Going to the election. Yeah, which makes sense. But we're currently in the stock market. We are living through the melt up, blow off top phase. This is it. It just hasn't blown off yet.
Yeah.
All right. But it's still melting up. So it could be overextended, and that's what markets tend to do. That's
people are emotional.
Yeah. And all financial markets, including crypto, the stock market, they are just an expression of human psychology for the most part.
I agree.
And driven by liquidity. So as long as people are feeling, fine and everything's good and the headlines are telling you everything's fantastic, even though they're really not. I know they're cooking the books. I look at the data.
Yep.
People are going to feel that positive sentiment and emotion in there and confident, But you also have the Fed participating too in the stock market. Okay. So, this can be overextended for months to go from now or even longer.
What do they say? The markets can be irrational longer than you can stay solvent.
Yeah. And I'm sure we're going to see that very soon. You just have to be able to identify extremes in the market. Okay. And this is clearly an extreme. So if you're a trader ride the trend until it becomes unreasonable to do so. If you're a position trader, a investor, you can still do that as well. But if you're trying to enter the market at this point and you're thinking, okay, this is my entry point for the next couple of years, decade from now, this is the worst time to get involved.
Yeah.
Unless you have a risk management plan.
Correct.
Yeah, because we are at the heights of the market, and of course it can continue, and I expect that to happen. As David Hunter says, I agree with his analysis.
You think 10,000 for the S&P is, I mean, that would be a euphoric blowout top for sure.
It would. I don't have any specific figures in mind, but I could see it passing 85, getting to 9,000, and within that range. Yeah, I could see that
for
happening.
the midterms, that'd be great, right? That would invoke a lot of confidence for the Republicans and being able to retain their positions through that. Voting
they
period.
want to stay in office and get reelected. So even if there is some sort of risk-off event or cool down during or leading up to the November midterm elections or right after it, I believe it would be a V-shaped recovery.
I do too.
That's how I anticipate this playing out. And but once we do have a cool off in the market, and it's inevitable because nothing goes up in a straight line, I expect that to drag crypto down as well, simply because the correlation is strong and it's very liquidity sensitive.
How do you describe the discrepancy we're seeing in the stock market from crypto right now?
Oh yeah.
Because the markets are up and to the right and doing very well, and crypto's down.
Yeah, it's a very simple explanation.
Okay.
So all assets and asset classes can be at different stages of their cycle at the same time, simultaneously. Yeah. Now, as you get later in the credit cycle, what's interesting is the highest risk, most volatile assets tend to sell off first. And that's why crypto, the institutions, whales that are participating in this market, holding it up really, they decided to de-risk and take chips off the table because they notice overextension in the market. And this is when Bitcoin hit its all-time high in October and then into July as well.
Yep.
Okay, so that's a de-risking. It's just prudent risk management. Okay. So we see that sell-off and that selling pressure actually take place first in the crypto market because it's the highest beta asset out of all asset classes. So that sold off first. And what's interesting is you had commodities, energy performing very well. And that's actually typical at the later stages of a credit cycle as well.
Okay.
So that's actually a very repeated pattern that we see throughout credit cycles. And so the point I'm making is that different asset classes can be at different stages in their cycle. But from an investment perspective, that actually is a good thing because what it means is the next path of least resistance for crypto is eventually higher once we get through this trough and capitulation phase.
Do you think there'll be a rotation out of stocks into crypto? Is that the way that the liquidity is going to go as there's a sell-off there? Crypto's going to go?
I don't think it would be a very, very tight timing relationship right there. But I do see that rotation shifting, and I'll explain why. And this is very important for people to understand, and this is based on my due diligence and analysis overlaying the charts. So altcoin season, people have heard about this term. It's just a major rally and outperformance in the crypto market. What's interesting is I overlaid interest rates, the Fed funds rates, with every crypto altcoin season we had and every major cycle. What's interesting is every major rally that took place, altcoin season, in the crypto market, with XRP outperforming 500% move, that happened when interest rates were below 2% every single time. So the reason we didn't get an altcoin season or massive expansion in the crypto market is simply because rates have been elevated since 2022. Now that Jerome Powell has destroyed the economy and done his job, he's passing it on to Kevin Warsh, who's a crisis management expert because he served as a Fed governor from 2006 to 2011, and he actually helped bail out AIG and Wall Street. He actually participated in creating the response, the emergency response in 2008. And now he's coming back into the picture, taking this stuff off Jerome Powell's plate. So, yeah. So what's interesting is the outperformance of crypto is still my long-term thesis. I still see that happening, especially utility digital assets that have institutional interest and backing.
I wholeheartedly agree. So how aggressive do you think he's going to be in lowering interest rates? Or do you think he's going to lower interest rates?
I do. I think he's going to cut them to zero. Yeah.
Like
aggressive.
Just from 5 to, or do you think there's going to be some pit stops along the way?
Well, the Fed's fund right now, 3.75, something like that. So there could be, it could be a gradual cut, but I do see a emergency pivot coming. Simply because all the macro warning signals I showed you, they have historically preceded financial crises. And actually in 2026 alone, between now and the end of the year, we have approximately $8 to $10 trillion in treasury debt that has to be refinanced. Yep. And they cannot do it sustainably at these elevated rates. And is it a coincidence that all these problems that preceded financial crises already happened? I mean, come on, it's like a movie script we're watching here, you know? So that's how I'm looking at it. And I'm looking at it objectively. Yep. You know, I'm not taking any biased perspective. This is objective. I'm just looking at the data and historical patterns because I think it's going to play out the same way it has in the past, you know? And this guy is going to cut rates because he'll be forced to.
So do you think the reaction from the Fed is going to be proactive this time or reactive?
Reactive.
Okay.
Yeah.
Just as it has been in the past.
It's always, they're always reactive, but that's by design. I mean, I'm pretty sure they understand the operational mechanics of the system. And if they wanted to prevent something, they could. But when there's a financial crisis due to a funding or refinancing mechanism,
gives them the opportunity
to restructure their buddies on Wall Street, to consolidate wealth, buy assets at pennies on the dollar. It allows them to achieve multiple agendas simultaneously. And so that, I mean, they're going to have to cut rates aggressively. Yeah, because they got refinanced the debt. The interest is growing exponentially and it's just unsustainable at this point. And the bill is coming due.
Right.
So they're going to have to cut rates aggressively. This will give them cover, and whatever story they want to give the public at the time will also give them more cover to inject liquidity into the system. And what's interesting is that for the amount of debt that has to be refinanced, I learned this from Michael Howell, there has to be an equivalent amount of liquidity in the system for the amount of debt that has to be refinanced. So as the debt is increasing, the more debt that has to be refinanced, there has to be more liquidity in a balanced ratio to refinance the debt.
I've heard Warsh speak in an interview, and he talked about being able to lower M2 money supply while lowering interest rates.
Yeah.
So that would kind of be juxtaposed to what you just mentioned there, right?
Yeah, but what's interesting is that's the thing. He said that, yes, but I don't believe or take anything they say at face value, because Jerome Powell also said he was going to hold rates high. And then we had the C-19 event that came out of nowhere because of the liquidity crisis.
Then he had an excuse.
There was an excuse. Now he had a story, you know, and it was an emergency measure that had to be taken. So we're going to see monetary policy pivot to extremes. And one universal timeless phenomenon is that pretty much everything in the universe is cyclical for the most part.
I would agree.
And that includes not just human emotions going from one extreme to the other, or assets going from one side to the other, one extreme to the other, but that includes everything from your biology, your cells, the weather, life cycles, and policy, the credit cycles. They jack up rates. They lower interest rates, they expand the money supply, they contract the money supply, they go from one extreme of conventional tools to the other, and we're going to see that cyclicality play out in monetary policy as well. They will go from one extreme to the other. And you're going to see that reflected in the financial markets too.
Yeah.
So everything is cyclical. So just because they're saying they're not going to do something, or they're just going to keep things steady the way they are, does not necessarily mean that that's going to be the case indefinitely.
Could he use a function of the bank? So let's say we do see, a huge Cambrian explosion.
Private market?
Well, the stablecoin issuance.
Yeah.
Right. So they could reduce M2 money supply on their side, but we could have more stablecoins being issued by the banks to be able to provide that additional liquidity. You think that may be a mechanism where they could expand the money supply like you were talking about, and also lower interest rates, but look like they're lowering the M2 money supply?
Yeah, they're definitely going to orchestrate some exotic gymnastics, financial gymnastics over there. I wouldn't be surprised. But at the end of the day, I mean, I'm looking at it objectively, and I'm looking at the fundamentals and the debt. And the current situation is there is no way out of this corner without injecting more liquidity into the system to refinance the debt at the expense of the currency. And if the bond market has any problems, which usually happen during periods like this, they will sacrifice the currency to save the bond market. Okay.
Yeah.
And I anticipate that to play out the same way. And the Genius Act just gave them some cushion for a period. That's really what it is for now, for this transition to play out. Because now they have demand for treasuries.
Correct. So they currently have like two levers that they can pull. They can play with interest rates, or they can adjust the money supply. And both of those are kind of proxies to be able to incentivize certain behavior in the economy.
Yeah.
Do you think that they're going to potentially have a third lever with, I don't know that this will be here in the US, but with CBDCs? You could actually affect the velocity of money by incentivizing people to spend money within a certain duration, or you could more directly affect behavior if they had that monetary tool. Do you think that, I don't know that the US is going to have that, but other jurisdictions, do you think that'll play out?
Yeah, I mean, approximately a little over 80% of all central banks are already have done the research and development on central bank digital currencies. And I mean, if you want to call it stable coins, central bank digital currencies, at the end of the day, if you move the veil,
it's programmable
the mechanics
money.
are the same. Okay.
Yeah.
So it doesn't matter what they label it as or repackage it as. At the end of the day, that is the destination. And in that document I shared from the Hoover Institution, co-authored by Kevin Warsh, they have countless sections in there discussing smart cities, stable coins, CBDCs. I mean, that's the agenda here.
Yep.
Okay, that is the direction we're going. And the truth is this: you can either see it for what it is objectively and put yourself in a position of power to give yourself optionality and prepare for the inevitable, and give yourself some level of protection and support, because that's where it's heading. Or you could just sit back and ignore it and fall further down the food chain and have to rely to an enormous extent on these
bureaucrats in the government.
Yes, that are coming. At the end of the day, I mean, that is the direction we're heading. So we're all going to be in the same cage. Okay, that's the truth. But you could be the guy in there, or the woman that can go to the restroom when you want, eat when you want, go to the basketball court in this prison and have that freedom. Or you could be the person that's stuck in the confined cell in the prison. But we're all going to be in the prison. Some are going to have more optionality and freedom and wealth and flexibility.
I would argue that we already are. The debt-based system that we exist in and the confines in which you have to participate, there's rules to the game. And I think what you're saying is, if you understand the rules to how this system works, then you can leverage those to your advantage. Agreed. But if you're ignorant to the rules at all, then you're just, you succumb to those circumstances, and then you're upset about it because you don't know how to play the game. And I think you guys do a fantastic job of explaining all the rules and how this stuff works, so that the average person can use that to their advantage and at least have some optionality, or, position themselves well moving forward. It'll be interesting. The last thing I wanted to touch on with you is just AI and how that's going to work with blockchain, with this total global, transition that we're going through. Do you think that there's part of my thesis is they've pushed up the M2 money supply and done the things that they've done because they knew a deflationary collapse would happen if they had not. With the implementation of blockchain and AI and these other progressive technologies, you should see significant cost reductions in the production of goods and efficiencies created in the economy that would then reduce, prices across the board, assets as a whole. Do you think that there's any credibility to that, or do you view that completely separate?
Yeah, I view that. I think it's going to have a deflationary effect. Same thing like when oil prices spike, people think, oh, that's inflationary. Yeah, momentarily.
Right.
Maybe it would be inflationary in 2 or 3 prints in the CPI data, but ultimately it's deflationary because if you raise energy prices, now people won't spend in the economy because that money's going towards that. Now, the same concept applies to all these innovative technologies, okay? AI, robotics, all of that. It's deflationary down the road, but who knows how long that will take to actually see that in effect. Now, the other part to that is at the end of the day, it's all about the currency. Okay, if you're devaluing the currency debasement, which is what's happening now and going to continue to happen, then the question is, which one is going to be the stronger force here? The deflationary effect or the currency debasement? Because in my opinion, I think to keep this system going, they're going to have to expand the balance sheet by trillions and trillions of dollars and debase the currency to an enormous extent just to keep it going. But at some point, there will be a critical transition point where they will have to introduce a new currency system. So far, the idea is there's research, development, it's being built in the background, but we're still using the same system, the same currency. But at some point, that's going to change because historically, every currency, every empire, and every government has collapsed at some point and has to be reset. So I see that coming. Yeah,
I would agree with you. And I think we're at that point, right? So once our debt reaches a certain level of GDP and our growth, then it becomes untenable to continue to be able to service the interest on that, which is exactly what you're talking about.
Yeah.
So they normally will devalue the currency because then you're paying back that debt with, currency that's less valuable than it was before. But to your point, I think that we're going to move to an asset-backed system. So it'd be interesting to see the transition here because they're going to have to reinstate trust. At this point, people are well aware of the debasement of the currency. I mean, you're seeing it at the grocery store, the inflation in home prices, and your ability to be able to purchase things compared to what it was just 10 years ago. Most people are having to work a couple jobs just to be able to survive at this point. So, in order to prevent a revolution, there's going to have to be some change here.
Yeah, they will probably allow things to get overextended, but they won't let it be like that for too long because they wouldn't be able to restore law and order. So they might squeeze as much juice out of this can as long as they can until something breaks, and then they will react. But they already have the solutions for the new system. It's there, but they know that they could keep this going for longer. They know that because
Peter Schiff has been talking about this for 26 years, maybe even longer than that.
The way I look at it is, I studied I devoted a lot of time to understanding monetary resets. And what I found is all monetary resets throughout history happen in a sequence with 3 things happening. Okay. The currency, they started from a debt problem. So too much debt in the system.
Financing things, expanding your economy.
Expanding the debt too much. Second, that led to currency debasement and very high inflation. And then third, you had revolutions and riots. Now, that third part of the sequence is when the reset actually happens. So far, we're not even in hyperinflation yet. Okay, this water bottle still costs like $1, So we're heading that direction, but it hasn't happened yet.
Yeah, we're not in the Weimar
But
Republic.
people are starting to feel it. Yeah, exactly.
You don't have wheelbarrows of cash to buy a loaf of bread yet.
But we're heading in that direction. I mean, that's inevitable. We're going to hyperinflation if something doesn't change eventually. But there's still juice in the can, basically, is what I'm saying.
Well, this has been great, man. I think that people are going to find this really compelling. If people want to learn more about what you guys do over there at Black Swan Capitalist, where can they reach out or where can they find you guys?
Yeah, thank you, Jake. I'm on Twitter. I'm on X. My brother is on Twitter and X. We both have 2 YouTube channels, Black Swan Capitalist, and then my personal YouTube channel is Vandell Aljarrah on YouTube. Yeah.
Well, thank you again for coming in and taking the time for the conversation.
It's been a pleasure.
You know, it's always great to chat about this and get your perspective on things because, you know, I think we very much agree on the long-term outcome, how we get there, you know, and I'm okay either way. I think we both are. As long as the long-term outcome, we get a revaluation and certain digital assets do exceptionally well. I think a lot of the people that watch both of our content and ourselves are going to do really well.
I believe so.
Things as they transition.
Indeed, I believe so. Yeah.
Well, thanks again for watching. Hopefully you enjoyed it. Please like, subscribe, share, do all the fun stuff, hype it if you feel compelled, and we'll see you on the next one.